So Warren Buffett says dive in when everybody's running away. Interesting, considering about $140 billion has been pulled from stock funds by fraidy cat investors over the past year. Michael Holland not scared. He says now's the perfect time to be in equities. Chairman of Holland and Company, why aren't you scared?
Maybe not the perfect time. I think maybe 7 years ago was the perfect time to be in.
Yes, I would say.
Okay. Oh, by the way, one of your earlier guests talked about Exxon. That's one of our stocks, if you recall, that we talked about at the beginning. But in the fullness of time, when you have all these people exiting the stock market, when you have all these people selling bonds into the bond market, which Warren Buffett is also doing, you have to get, these are persistent facts. You have to pay attention to them. So it means that $140 billion has come out of the market. This is where the prices are after it's gone. So you have some great companies selling at reasonable prices because of this. And you and I have talked about these companies in the past, companies like Google, companies like Chubb, companies like JP Morgan, selling at very modest valuations because of this selling. So it's a great time.
What do you consider a modest valuation? 11 price-to-earnings ratio? 12?
Oh, yes. Oh, yes. You know, when you're talking about the kind of valuations with these great companies, where Google is selling at a price-earnings multiple that's less than its growth rate. These are crazy things, where these companies are paying off big, fat dividend yields. So, I mean, this is no-brainer time.
What would you stay away from, though, Mike?
Well, interesting. Warren Buffett, whom you cited before, who buys stocks at times like he just bought Precision Castparts and is paying for it.
Bought the whole company.
Bought the whole company, and as a long-term shareholder, I have been delighted with how he does that, but also how he does the capital markets part of it, which is he always goes to the part of the market that is the most expensive. He just sold one of his biggest debt offerings ever, $9 billion in corporate debt from Berkshire Hathaway. I don't want to be on the other side of that trade. I'm delighted as a bond shareholder, as a Berkshire shareholder, not to be a bondholder.
Yeah, and you know, when you look at what he does, he is unafraid. He loves, his favorite days are the ones where we see 100, 200, 300 points to the downside.
Let in the street.
He says, what I wanted was cheap now, so why not get in?
Yeah, so $140 billion has voted against Warren Buffett's strategy. I think I'd go with Warren Buffett.
Yeah, last you checked, right?
Last I checked, yeah.
You worried about the Fed at all, raising this year? Will it hurt?
The Fed has actually begun to lose the confidence of the markets a little bit over the past year or two. You know, you had a lot of people carping about it as 7, 6, 5, and 4, and 3, but they actually did a pretty good job back then. And right now, the last couple of years, actually most of the central banks are beginning zero interest rate. Not a good idea.
Where were you 9 years ago when the market hit bottom March 9th? Today, 7 years ago.
Right here.
7 years ago.
Right here.
Yeah.
Yeah, and fortunately, we made some money since then.
Because you went in. Mike, it's great to see you.
Liz, thank you very much.
Mike Holland, Holland and Company, has been a friend of this network since we were a baby 1 day old. Fist bump.